Morning, Steve Free in Chicago with the morning grain comments. Overnight, commodity trade was pretty choppy. Grains had a low volume trade, with beans a little bit higher, wheat a little bit lower, and corn unchanged. Crude's lower, U.S. dollar is higher. Chinese stocks were sharply higher despite the fact that Moody downgraded China's credit outlook, and we've got copper up. Here in the United States, the U.S. soybean barge basis has dropped pretty hard in the month of January and February, and new crop sales for next year's crop is down to 1.4 million tons versus 2.5 last year and 4 million tons 2 years ago. So you get the feeling that demand for U.S. soybean exports is slowing. Corn basis at the Gulf also lower, due in part to the slow export trade, but also we've seen an increase in farmer selling, and barge freight is at 4-year lows. We think the farmer is selling for a couple of reasons. Number one, to pay bills, but number two, when they sit down and look at the 16 cash flow situation, it's kind of bleak, and so I think both the financial planner and the banker is suggesting to sell some 15 corn before they go ahead with the 16 crop outlook. As far as the January USDA crush data, crush was a little bit higher than expected, but the pace suggests that the crush may be somewhere between 25 and 30 million bushels lower than what the USDA is saying on an annual basis. January soybean oil stocks were higher than expected, suggests that the usage to date is down 1% versus USDA's forecast of an increase of 3%. So we saw some pretty heavy selling in soybean oil yesterday on this data. The January data suggests that U.S. soybean meal usage to date, though, is up almost 5% versus a 4% gain that the USDA is forecasting. That's offering a little bit of support in meal versus oil. There was talk that both Philippines and Mexico bought some French feed wheat lower than world corn prices, and option volatility set lower lows in the month of February. But we noted there is some call buying noted to protection against a summer U.S. weather rally. U.S. 6 to 10 day and the 8 to 14 day continues call for normal to above temps and normal rains over much of the Midwest. Funds yesterday's sellers of beans, meal, oil, corn, and wheat continue to add to their short positions in beans, meal, corn, and wheat going into the growing season. Key overnight is a question mark is that now that wheat has made new contract lows and corn and soybeans are near contract lows, can they hold these lows going into the planting season before the March planting intentions and stocks report, or do we make new lows on the fact that at least over the 2-month weather outlook, there doesn't look to be any worries in the U.S. So quiet, choppy trade overnight. We're just above contract lows. Do we trade below those before planting season, or do we hold at these current levels? As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.
For April, big S&P 1820 puts and selling for April, big S&P 1900 puts.